Let's find out what the outlook is on the fundamental side as well. Prateek Agrawal is the Executive Director, Business and Investment Strategy at Motilal Oswal and now joins in on the show. Hi Prateek, morning. Let's begin by talking about the catch-up play within the heavyweights. The likes of Reliance Industry or the HDFC Twins, for instance, have definitely started performing, but just right now. How much of support do you believe that they are likely to lend the markets in their move upwards?
No, on valuations, while we are at a high, if you compare the two highs, this one and the one that we reached last year, sometimes in October, on valuations, we are still 4-5% cheaper, because in the interim, we have seen a compounding of EPS, and that makes valuations a tad cheaper on the heavy-weighted, on the large cap index. Now, we are seeing strong inflows from everywhere, and which means, we are seeing one space after the other follow up, and there is some amount of rotation which is going on. Until the flows continue in this manner, I think this should be expected. Now, in terms of which part of the market is expected to do better, my thought here are slightly different. One, most of the themes that we are talking of lie in the mid cap space. Think of anything, China Plus One, PLI, Make in India, whatever. Most of the beneficiaries, most of the best exponents of the theme are in the mid cap space. Second, if you look at the large cap indices and you segment the indices into names which may be facing some issues, yes, flows of money can take everything up, but if the larger caps are facing issues, we believe some of the largest caps in the country are facing issues of one variety or the other. I think the second half of the index is where we will find alpha opportunities. Besides that, like I said, in the mid cap space. So not really looking at the super large caps to drive index in any meaningful manners. Index is fine. We are looking at just about double-digit kind of returns to the fiscal year end, which means again returns from the top end should be expected to be muted to my mind.
Prateek, I'd beg to differ since you talked about super large caps. Look at Bajaj Finance. That stock alone is up almost about 6% Can we just have that intraday graph right now? I mean, how do they do what they do? Q1 new loans are up 34%. There you go. Bajaj Finance is up almost 7.5% right now, Prateek. And AUM growth, the best in 14 quarters.
Yeah. No, so when I said super large cap, it was by weight in the index. So this guy is not up there. So, but anyways, so yes, good set of numbers. And if they have done this, then one should expect something similar with other businesses in this space. People who are lending, taking advantage of the technology, I think one should expect similar growth from all of them.
Fair enough. What about the outlook when it comes to the competition that's heating up within the two-wheeler space with all of these new launches, the latest, of course, being Hero, Harley? How are you sensing players really sticking out and continuing to hold on to market share? And what's your outlook about some of the challenges? Do you think that now they seem to be out of the way?
See, I would be a party pooper here, but let me do it. I see two-wheeler market as having saturated. Most families in India have a vehicle, so the play is either that you premiumize, okay, or the winner or net value creator would be a new entrant in the EV space. Somebody who is doing very well on the ICE side will just replace if you move to the EV side. You don't add value. Okay, and that is an issue that I see in the two-wheeler space. In my mind, it's a net zero kind of a situation for most of the larger guys. for guys who are capable, have a good platform, good R&D facility, but for some reason did not succeed as much in the ICE space, have this disruption to back them up, gain market share in the EV space. We see that happening both in the two-wheelers and in the passenger vehicle space. Really don't see the guys who are super large in the ICE space adding much value, especially if the valuations are today peakish.
But Prateek, how things with you? Haven't interacted with you in a while.
No, very good. Getting better.
I'm asking a very simple question, which in a sense we are trying to ask everybody, which is that what is that first sign or what are the first signals which you would look, which will convince you that we are nearing a short-term peak?
No, so like I said, valuations are something which are reality, which act as gravity. So yes, flows can the market higher versus reality, but one should always keep an eye on valuations. And hence, when the larger cap index question came, I said, if we work with 18 and a half times 1 year forward earnings as the construct, then we are just about 8-10% away from where the index should be. Now, index has its own life. It can, go surpass that, come back, underperform and rise. So, the track that one can take can be different. But that is how it is. In the mid cap space, again, the same thing is true. There, the indices are actually 10% higher than the earlier peaks. The traction in terms of earnings for these spaces which are in focus has been higher. So it is sustainable. As yet, I don't think it is getting into unsustainable territory. But increasingly, we are starting to see, ideas not focused on earnings, more focused on sum of part kind of stories. In the beginning, it is okay. You will still have some runway, but that is the first sign of, things getting a bit, जिसको कहते हैं, exuberant.
It's in the second half where you will see that alpha generation from within the broader end of the market. Tell me what mid-cap pockets are looking interesting and are they to be bought right now?
Yeah, so lot of mid-cap pockets are looking interesting. I tend to see the market in terms of theme. So what happens is everybody today looks at 2 year hence kind of earnings project and buy basis what is looking, better on valuations, quality kind of a mix. And hence, to my mind, doing that is not going to result in any significant alpha. It has to be growth sustaining beyond those 2 years of projection period, which is where longevity of the theme comes in. I think there are spaces where growth of a order higher than that of the index will are meaning today, and that is what makes me believe this is time for alpha for managers. So spaces could be, while times are not good for chemical companies, but maybe good time to accumulate. The growth story is super strong in volume terms. So that is one. Second, EMS companies, company after company that you would want to look at in this space is benefiting from PLI, is benefiting from Make in India, benefiting from global guys wanting to move away some bit of supply chains into some other country. If you are looking at retail banks, now this is a space where you will still get over 20% kind of retail AUM growth, the part that you want to buy, that the part that we want to buy, versus the bank who want to do everything, corporate and retail, where the growth may be 14-15%. So segregating that. And there are other spaces, engineering is something where we see a lot of traction. Defense continues to see traction and momentum as we go forward. Luxury and retailing is something that one should have as a core of the portfolio, because
All right,
here
Prateek, good to have you as always. Thanks so much for sharing with us your outlook. But time to put the spotlight